Come inside. Little ELP to start the day. We rocking?
So Maris, can you hear us now? Audio's okay?
I can hear you now. I don't know what's going on
Good.
though overall.
I don't know.
Let's share this. So
Technical
much.
difficulty. Sorry, folks. Let's share this and make sure people know that we're actually doing this morning. After Alrighty. We are reshared, retweeted. And one more. You guys have a good weekend? Last minute Christmas shopping?
Yep.
I wouldn't go near the mall this weekend.
Pretty early.
I wasn't going near the mall this weekend. My wife said there was a 2-hour wait to take your picture with Santa.
Wow.
And she stood there all 2 hours. God bless her.
Santa's just very busy this time of year. I'm surprised he's at the mall though.
I'm telling you, you'd think he'd have bigger fish to fry, but apparently not in Marin County. High demand. He was in high demand. All right, boys, you guys ready?
Rock and roll.
Ready to get the show on the road? All right, let's do it. Happy holidays, everybody. Welcome to Wall Street Beat. And our healthcare, biotech, and Japanese stocks pro, David Maris. Let's get this show kicked off. Sorry we're late. We're having some technical difficulties with our audio, but I think we got it squared away. So, Mr. Maris, what's on your screen today? Did we get all the? There was some big news at the White House end of last week.
Yeah, so it's following exactly what we figured would happen, which is the president came out and said, "Hey, we've settled with a whole bunch of other drug companies, and now we've only have a handful of the biggies left, but they'll all fall in line. And the deal is the same deal as the others were, which is new launches will come out at the U.S. price and international prices at the same price. They'll try to normalize prices in Europe with the U.S. Any benefit that they get from raising prices overseas will be used to benefit prices in the U.S. Now, how that works out and how they actually audit that is really, I mean, I don't even know if the government has the ability to do that, like how they can do it. But so in other words, if there are two ways to make prices equal in the U.S. and Europe, one is to raise price. Someone's getting arrested. And I know it's not me. I live a straight life. All right. So straight and narrow. So if we, you can raise prices in Europe or you can lower prices in the US, and the, de facto thing is it's somewhere in the middle. They'll do a little bit of both. But the idea is that if they raise price in Europe and they make more money, that the additional money that they make will have to be used, part of the agreement will have to be used to lower prices in the US. That's the mechanism that I don't know how that actually happens, but let's say that it does. So that's all good news. And they commit to.
But doesn't that affect demand, David? Does demand go the other way if prices go up significantly in Europe?
I don't even think they can raise prices in too many markets anyway. Like there are lots of tender markets where they say, okay, for the next 3 years, we're going to put this out to bid. And so there are contracts. So we'll see. I mean, it's going to be interesting, but it's another win for the president. But what I mean by when I said it's exactly what I thought, that of course I thought would happen, and I think a lot of people did. But the part that I think people didn't realize is that, and I said this a couple of weeks ago, is that he's going to turn his attention to the insurers. And sure enough, over the weekend, he said, they're making too much money. I'm going to do what I did with the drug companies, call them all in and tell them that they have to make less money. So now, I don't know anyone who is happy with their insurance. Also during the weekend, there's lots of people talking about, okay, the ACA subsidies will be extended at least a year. And politically, that's a really tough thing to not do at this point, right? If you don't do the subsidies, all of a sudden everyone sees their insurance rates go up. They're going to blame the party in power that didn't do the extension. Now, these subsidies, it's not as though insurance rates have been reasonable with the subsidies and then they're unreasonable. Everyone that I know, people who have very little money, people who have lots of money, are all saying the same thing. This is like, what's going on? How can this be? We have the Affordable Care Act, and insurance rates have gone up 15, 20%. My family is young. I don't have a lot. Like, it's not, people who are healthy are seeing huge increases, and they're wondering, like, well, and they're increasing in two ways, right? It's the out-of-pocket expense, but also the deductibles are going up. So you're like, okay, I now have to spend $16,000 before you start paying a certain amount of my health insurance. So this is a very good political time to do it. And if he planned this, it's brilliant. It's literally brilliant, because he's now pivoting from drugs to insurance, and everyone hates insurance. So let's see what happens.
Well, isn't there a big trigger at the end of the year, David, where the Obamacare what's coming off the table on 12/31?
Yeah, so the subsidies expire. So if people are in the exchanges and they qualify, they can get some of their insurance costs paid for. So what the Republicans are generally saying is that those subsidies were freebies for the insurance companies, that they had no incentive to lower price. There was no market mechanism of people shopping around, because the government's giving the insurance companies these subsidies, or giving people these subsidies. So what might be $50,000 insurance is now $20,000 insurance. And then so people don't shop around. They just say, okay, well, I'll take that insurance. That sounds great. So that expires. Without those subsidies, people will see their insurance rates go up by a lot, and they're going to say, well, the Republicans didn't extend it. What the Republicans have to do is really explain to people that this is their money, or other people's money, being subsidized. This isn't some sort of program.
This is taxpayer money. Exactly.
Yeah, this isn't some sort of program that the insurance companies were doing, and it's not. But that's a hard sell, right? Once you start to get a benefit, once you start to get a subsidy, it's hard to take it away. So over the weekend, Manchin, a kind of moderate Democrat former senator, came out and said, look, until we cut these subsidies off, the insurance industry is not going to care. I agree with that 100%. That's why, like, I think the solution is going to be something pretty drastic. I think a win-win might be something that Hillary Clinton proposed a long time ago, which is to force a like no copay or $20 copay for everything. And that would be something that insurance companies could absorb. People would see it in their pocket. It's very visible. It doesn't change your insurance rates, but that's at least one easy win. It's not that expensive, but we'll see. It's another battle, and I think it's going to be months and months of this. I don't think it's going to be something simple, because there are very few insurance companies, and they, unlike drug companies that can say things like, hey, we're going to build a factory here and spend $10 billion in CapEx, and maybe they won't even do it. Insurance companies don't have that ability. They can't bring manufacturing home. They're all domestic-based knowledge workers. So it's hard. The only lever they have, The only lever is we're going to make less money. And so the bet in owning an insurance company at this point is, for me at least, would be, I don't believe the president can do anything and I'm willing to risk it, versus, hey, I can only see the downside. And for me, I can only see the downside. I've said before that I like to own therapeutics. I'm not a big, owner of insurance companies. I own a little bit of Oscar here and there, but other than that, I'm not trying to be smart on United Healthcare just because I don't think I can be. And they move as a group, and this is a macro event, and I can think of it only as an overhang until it's not. And so some people might want to play that, well, eventually it won't be an overhang. I'm not going to do that.
Thanks. What are the charts saying in like a United Health, or do you have any? Can you pull up one or two of those names and tell us what you think?
When public opinion applauds the murder of one of your CEOs, this is kind of this is what the chart looks like. People detest managed care, and they would detest PBMs if they know what they were. And United Health, you got everything. You've got the insurance and the PBMs. And sorry, Warren Buffett, I think this is dead money. I mean, everything I just heard David say, of all the gin joints in all the world, why would I walk into this one? And tell me when this changes. And I just don't see it. So I wouldn't touch this with a 10-foot pole. And this, I mean, look at the long-term chart. I mean, this was money good for decades. And
wow.
The song is over. It's all behind me.
Okay. All right. So we stay away from these. These are dead money.
Yep. And I know you joked. I know you joked about the Japanese stocks, but last night last night I added to a few more. So
did you?
Yeah,
added to a few of your positions.
Yeah, I mean, pretty much.
You didn't add new positions. You just added to a few that you already have.
Because I'm at like 15 or 20 stocks, and so I think I'm pretty well diversified. And do I really want to make life more complicated when I do sell them? Do I want to have to put in that many orders and the rest? But
is that 15-20 total or 15-20 in your Japanese?
Just 15-20 in Japanese. So because again, since I'm not in that market and I don't know these companies, since they're not healthcare companies. A couple are Chugai and Fuji Pharma, Sawai. These are a couple of generic companies that I know fairly well, but some are like Yamazaki Baking Company. They make bread. They make really good bread. They make like
a public company that makes bread.
They make bread. Well, they're like a commercial baker, but they also make kind of like a Hostess. I mean, better things than like a Hostess, but they make those types of confectionaries. They also own Tomcat Bakery here in the U.S., which is a big bakery for high-end restaurants. But Ajinomoto, which is a spice maker, so these are companies that I don't have experience with, so I have to own a bunch so that I don't blow up things. And I want domestic demand companies that, with a stronger yen, people buy more of. So
they sound pretty defensive.
They are, and I have a Toyota, and I think is the only one that is not defensive, and the one that people would warn me against a stronger yen because that would make Toyota a little bit more vulnerable in the U.S. But that's actually the one that in the last 2 weeks, there are two, since I started putting these on, there are two that are up more than 10%. And that's Sawai, which is a generic company, and Toyota, which is a multinational car company. So the one that's most vulnerable to a stronger yen is the one that's done the second best. So.
All right. So David, back to the drug news. Is there a trade in there? Is that price? Was that pretty much
Yeah,
priced in? Was it?
the trade goes with if you want to be basic, XBI, XLV, the two indices, XBI being the biotech index and the XLV being the pharma and healthcare index. Those are the two that I still think in 2026, at least for the foreseeable future, should do really well because they're low multiple, were hated all last year, starting to come back.
Yeah.
They're now probably not overweight by most mutual funds, but they're probably market weight. And I think there's going to go there. So the easy money might have to market weight into the AI thing. Like you're just hearing about AI now, and you're like, oh, I think NVIDIA. That's what I want to buy. The chip makers. I think pharma's in a really good spot.
Yeah. Okay. All right, Bakes, before we got on, we were talking about kind of a quiet Monday, and Bakes reminded me, yeah, except for the metals, silver hitting all-time highs overnight. And anyway, Bakes is having a day. So what else is on your screen besides your winners, Bakes? Or do you want to talk about those first?
To be blunt, not much because I shoot my losers. I mean, I'm dead serious. I mean, I was wrong on cannabis and it's gone, and I'll think about it some other time. But I'll do this real quickly. But gold, you can't really see it here, but it's gapped up over here on the far side. Gold itself spot is at 4,400 plus, and it's confirming. It nagged me a little bit that it wasn't confirming what the white metals were doing, platinum and silver. So gold is now joining the party. Platinum, PLTM, I'm up 85% plus. It's gapping up today. The spot is 2,000 plus. I've peeled some off. When it gets to 13, 14%, I pull it back to 10. And as I was saying pre-show, I hope I lament every single sale I ever make here. But precious metals are working. Silver, this is SIL. This is my mining stock I bought back in June. It's up 85% plus too. These are my number 1 and 2 stocks. You see the gap up here. And I'm doing a little bit of exploration and analysis and research on, is what's bad for Bitcoin, is it good for real, real precious metal? Gold, Bitcoin was touted as digital gold. Well, you know what? Gold is really acting much better than Bitcoin. And I know the Bitcoiners will say, oh, well, it's over the last 15 years. Okay. But I mean, this is the chart of silver, and here's the chart of Bitcoin, and you tell me what you want to own. So I'll take a breath there. But to our members, I've been talking about this for a long time, and so some part of that 85% I hope is in your portfolio. This isn't financial advice, but we're pretty good at this, and we're certainly benefiting today, and we have over the last year.
Yep. Merry Christmas. Those are great calls, Bakes.
Yeah, Burl Ives, silver and gold and platinum. Yep. But it doesn't work in the song structure, so I'm not going to do that. Anyway, I got one more.
So you're saying stick with them, but to each his own, but trim them back. You're trimming yours back a little bit just to book some profits.
Yeah,
keeping your original position size. But
this is a good point. Okay, I'm a long-term bull. This is silver I'm talking about right now. Global X Silver Miners, SIL. I'm a long-term bull. I think when you take out 45 years of price history, when you broke through that 49.50 resistance that went back to the Hunt brothers and 2011, that it doesn't make any sense to me to go, to break through a 45-year resistance level and only be up for 2 months. That just doesn't compute. But you can see the drawdowns that can happen. 80 to 60, that's real money. So, and this can happen, and I want to minimize that, or at least psychologically, and we're all emotional beings. I try to be a robot, but I'm not good at it. When you have winners, take some off. I'm 20% in the silver in my portfolio. So when it works, I want to take some off. When it doubles, I'm going to take half off the table. And I don't want to jinx it because it hasn't happened yet. But it just makes sense to me to peel some off so that these drawdowns don't hurt as much financially and they don't hurt as much psychologically.
And then you're happy when you peel off those gains, you're now in cash. Do you redeploy, or you're just opportunistic about redeploying that cash when the opportunity presents itself?
I'm a shark. I sleep and eat. That's what I do. And I am going through, like I do every month, my 5,000 plus charts, and now it's 5,200 plus. They add 100 every month, and I look for the 10 best. I own 9. And if there's a chart that looks more attractive to me than silver, silver's gone. I'm going to put that in. I doubt that's going to happen anytime soon, but I'm always looking for it's portfolio Darwinism. Foster
Yeah.
Freeze, may he rest in peace, said, pigs at the trough. The hungriest pigs got to the food first.
That's,
Always refresh the portfolio, and I do it all the time. So stay
and
tuned.
then when you go in, when you started a position, do you start with 3, 5? What kind of depend on the chart? Like how big what kind of position do you put on
10%.
to start? You start
I
with
put
10.
10%. I put
Wow.
10, I try to own 10% positions. Now, uh, I wouldn't recommend doing that with individual stocks. I can't own individual stocks because of my wife's compliance department. They're wonderful people, but that's what they do. And so I have to own ETFs. So I own the Global X Silver Miners, and I own 30 plus individual stocks within that. So if there's a mine problem someplace, I'm not going to get blown up. So
Right.
I'm more diversified than that sounds, but I believe in stocks move in groups. Stocks trend for long periods of time, and I want to find the best stocks and the best trends, and I do that via the ETFs.
All right. Cool. Good
I got
advice.
one more. Okay?
One more.
Time?
All right. We got
Because
2
you've
minutes.
been on the show with me before with Netflix, and
Few
Netflix
times.
is kind of. I'm just going to put this out. I don't have any dog in this hunt or dog in this fight, however you want to say it. The Warner Brothers transaction is getting all kinds of news, but we talked about this, Steve, that things were so good that it was bad back here when it was over the 200 day by a record amount. And now I
Yep.
went back and I looked, and it is down below the 200 day as much, almost as much in percentage terms, not exactly as it was in 22, 2011, and 04. And so I just put this forward as a logical possibility where Netflix says, okay, Ellison's and Skydance, Paramount, you get what Warner Brothers. We're going to go back to what we do, which is mint money with, I think, a horrible user interface, but that's just me. And this stock pops back to this 115 level or so. So I would not buy this chart if I was going through it one by one, but just, with what we talked about in the past and some perspective, I think that's a logical scenario. And stay tuned while this Warner Brothers acquisition gets examined anew.
So you're getting constructive on Netflix?
Yeah, I think
Potentially?
if you own it, I wouldn't sell it. Look,
Okay.
you have it's sitting on the support that goes back, a year plus,
Wow.
and I think that I don't know if it's an investment; it's more of a bounce. I think it comes back to the 200 day at 115 or so. It's a great company. They mint money, and they don't Warner Brothers, as I listen to a lot of podcasts, is a nice to have, not a need to have. And if the Ellisons and Paramount say we really need it, and the bid isn't $30, it's 34 or 35, I don't think Netflix. I think Netflix would benefit by wiping their hands and saying, "Okay, we didn't get this one, and we're going to go back to making documentaries and comedy specials and print money." So
Yeah.
stay tuned. I have no way to handicap that, but I think that's a real possibility.
Well, they got the NFL coming up. They got the NFL for Christmas, right? So they've got they had Jake Paul over the weekend. I don't know how well that did, but I saw he got his jaw broken in 2 places, as he probably should have by that guy. That guy. I don't know if you guys saw any of that fight, but holy shit! That was not a fair fight.
I don't watch a lot of boxing, but it was clear that I watched this fight, and it was clear that he held back for the first few rounds. He wanted to make it, but then he just destroyed him. And his interview afterwards of just saying, like, listen, it's boxing. You have to be strategic. He really destroyed him. Like, he's and to say that he's looking for Tyson Fury next, I don't know if he can win that fight, but that's one that I would watch. So
for sure. If they could make that happen, that would be a great fight. But yeah, that guy was anyway. Jake Paul got totally outclassed by that guy. Anyway,
but
you guys,
I will say,
good?
I mean, they both walked away with $92 million. So
yeah, that's not a bad.
No one lost.
Not a bad payday. Not a bad payday.
Yeah.
Nothing else. He's a great promoter. All right, guys. Good show. Thank you.
One last thing. Ovid.
One last thing.
Ovid up 18% today. So still cranking away. Yeah.
Still like
on any news or
ID.
Someone launched a
pull up that chart, Fakes. Let's see what that looks like. OVID.
Someone launched coverage.
It looks like a David Maris Resolute Holdings special, and I would listen to him and buy it. So that's what
someone launched coverage today. So this is a research driven thing.
Does that mean a deal's coming in the next 6 months? An equity offering is in the next 6 months.
It could be, because the CEO, longtime CEO, stepped down to bring in the COO, who had been known to be the next CEO. That was recently announced, and so they probably did that ahead of an offering, because you don't want to do that and then have the CEO step down. Right. And they do need cash. They're not in desperate need of cash, but you've had two launches of research.
Good observation, Bakes.
Yeah, 2 launches of coverage in the last 2 weeks, and usually that's. Especially,
I hate to be so cynical, but after 30 plus years of doing this, that's what I see.
But if you're long when they announce the coverage, that doesn't suck.
Yep.
All right, guys, let's wrap it up. What's that?
Alrighty.
No, this is bullish. No question.
Okay, good.
It's,
all right,
it's no platinum.
David's sticking with it's not platinum, but
yet. So we'll see.
Yeah. All right, guys. Thanks for joining us, everybody. Enjoy your day. Enjoy the holidays. This is my last show until after the 1st. So we'll be on tomorrow, and then we'll be on next week for, I think, a Monday and Tuesday as well, and then that'll be that for 2025. Thanks for joining us on Wall Street Beats. Follow us on wallstreetbeats.com and on passes.com/wallstreetbeats. And have a great holiday.
Happy Hanukkah. Merry Christmas.
Merry Christmas. Happy Hanukkah.
Merry Christmas. Happy holidays. God bless.
Thank you, Jen.
Jen, thank you.
Thanks, Jen.